its goal for a full-year profit as the Wirecard scandal adds to the pandemic pain. Matt, good morning. I think this morning, you know, where you're sitting in Berlin, it's going to be a heavy day for the DAX, given all the companies reporting this morning.
Yeah, there's a lot certainly going on in Germany. You're looking at pictures of Commerzbank there right now, which is a big focus. Everybody waiting kind of on tenterhooks for the new CEO to be named. Here you see futures pointing higher, well, moving higher as well throughout the last hour. We saw some big gains in futures. Now the live cash trade opens up, and if we pull up the global macro movers screen on the Bloomberg terminal, you can see in the far left-hand corner the indexes pop up, as well as what looks like Hillary's mouse there, as they start trading.
Morning, everybody. Welcome to SG Trader, the live day trading channel. You can follow us for free, copy our trades, and make some profit. This channel is mostly for our clients and investors who use our strategy. So if you would like to use our strategy, you can get it from our website, company.co.uk, or you can see the ticker on a screen and you can get the strategy. What we show here, we show you 5 Forex pairs, and you can follow, you can copy the trades during the day, and you can see how we make money. We show you dollar yen, pound against United States dollar, Canadian dollar, euro, and Bitcoin. We trade our own funds. So this is not demo account. 1 pip equal 100 pounds, except Bitcoin, where 1 pip equals 10 pounds. We don't give any advices. So basically, if somebody would want to ask what to buy, where to invest, you better use trading academies or other channels, because we are day traders. So this is what we do. Okay, so welcome again. Welcome to our channel.
Backdrop of potentially more stimulus coming from the US. I mean, they're in a great luck, but I think there is a lot of political determination to get a deal. So I think there would be more stimulus, which would avoid, the extra unemployment benefit falling off a cliff. And I think monetary policy remains very, very supportive. And to us, investors, we think that the monetary and fiscal backdrop is supportive. And the economic data suggests that we are starting to, there's more evidence we're in the recovery phase of the business cycle. And as a result, we think that, equities should continue to do well, relatively speaking.
Is that Is the U.S. stimulus picture, or the U.S. economy, what's calling the tune for markets right now? Because it doesn't seem like we have a real clear, indicator of whether we're going to be risk on or risk off. What's driving these markets, Janet?
Yeah, so I think, this week, as I said, there is evidence that the Purchasing Manager Index, the PMI, suggests that the global economy continues to recover. So that is a good news for us investors. And of course, I think, there are going to be more stimulus. We think, last week the Fed has signaled that the interest rates will remain very low for the foreseeable future, and they're committed to support the economy whenever it is needed. I think that is the same rhetoric for other global central banks. So, this backdrop for us is still relatively supportive. So I think for investors, there is still quite cautious optimism in the market.
Yeah, the PMIs were optimistic and they were encouraging, but the joblessness component of them potentially signals a lot of worry when we have the jobs number out on Friday.
In the U.S.
Is this in the United States, is this momentum sustainable?
Yeah, I mean, obviously there would be some risk. We acknowledge that there has been some pickup in the initial jobless claims in the U.S., and we attribute to the fact that there has been some spikes in cases regionally in the U.S. So we acknowledge that, we know that the recovery is not bumpy; it is bumpy. So we take that into account. We think that, generally speaking, the trend is normalizing. So we will acknowledge that there is hiccup. There could be some pickup in the unemployment numbers this Friday. But generally speaking, we think that, for example, even the cases are picking up. We think that there could be because there has been more testing, and we think that generally the death rate, hospitality rate is coming down. So it seems to be better control of the virus generally, and there is really little political or popular support for any serious lockdown going into the future. So for us, the trend is getting back to normal and the lockdown easing. So we think that, generally we are heading in the right direction, and it is the direction that is important for us.
I make the distinction between the U.S. And Europe, of course, because although clearly the economy is still incredibly global, the narrative has been that there's a slight decoupling between the European and U.S. economies. And investors are starting to really, look at Europe as a possible winner here over the U.S. What are your thoughts on that? Can the European economic data be moving European shares at the European market open, or do we still have to talk about the U.S. no matter what time it is?
So we still like the U.S. market. That's primarily because of the sector composition, the technology, and the healthcare sector. But we are also starting to warm up to European equities, actually, ex-UK. So that is really because we think that the virus situation seems to have a better grip in the European area than the U.S. So that's positive for investors. We like to see that the virus is being controlled in the area. And of course, the recent passage of the 750 billion recovery fund for us is a reduction in the premium in the area, because it does suggest to us that there is a commitment for more fiscal integration and to support the economy, right? So that are all very positive. And of course, interest rates are very low, so that would be supportive. And of course, we think that, China, in the grand scheme of things, is actually leading the way in recovery. They're doing better. The data there is better. Things seems to be normalizing better there. And so Europe, especially Germany, they have a much higher exposure to China than, say, the US in terms of trade. So we think that could potentially drive the European markets higher, despite the rising euro.
Yes, certainly. The euro today on a 118 handle. Janet, we're going to talk more about China in the next block. Janet Mui from Brew & Dolphin stays with us. Also, results flooding in this morning from the continent. We'll discuss how attractive European equities are right now and break PMI numbers for the service sector. Stay with us. A lot ahead. This is Bloomberg. Good morning and welcome back to the European Open. We're about 10 minutes in today's trading session, and you're seeing green arrows across the screen of European markets this morning. A lot to digest: potential stimulus, geopolitics, earnings. The DAX in focus really today. We had BMW out, Allianz, and and Commerzbank as well. So we're going to take a look at those movers later. But right now, the DAX is up nearly more than 0.9%. Now for the Bloomberg Business Flash, here's Laura Wright. Laura, good morning.
Thanks, Anne-Marie. Commerzbank has abandoned its goal for a full-year profit. That's due to losses tied to Wirecard, as well as surging bad loan provisions. It comes as the lender seeks to emerge from a leadership crisis. This week, the lender appointed a new chairman, but it's still looking for a CEO who can navigate the conflicting demands of shareholders. PIMCO attracted new money in the second quarter, blunting the impact of massive outflows in the first 3 months of the year. The US bond giant brought in 23 billion euros in the period, but profit at parent company Allianz took a hit, with earnings declining by 19%. Its active investing units were already facing pressure from cheaper alternatives before the coronavirus crisis. Virgin Atlantic has filed for Chapter 15 bankruptcy protection in the US. That's after telling a London court it's set to run out of cash next month if a rescue deal is not approved. Chapter 15 allows foreign companies with US assets to protect themselves against claims while they work on a turnaround plan at home. Virgin is hoping to secure a £1.2 billion rescue package. That's your Bloomberg Business Flash. Anne-Marie, Matt.
Laura, thanks very much. Laura right there in London with your Business Flash. Now, about 80% of Europe's biggest companies have reported numbers for the second quarter. And while most forecasters saw the coronavirus crushing earnings, maybe they were too pessimistic. Bloomberg's earnings surprise function shows 40% of companies beat expectations, significantly higher than prior quarters going back to 2018. Which is weird because I feel like over time, 76% of companies beat expectations on the S&P 500, but maybe analysts have been doing a better job lately. In any case, Janet Mui, investment director at Brewin Dolphin, is still with us. Janet, what do you think about, I mean, it's not always about how much you make, it's about how much more you make than the market anticipated. So how has earnings season been?
So far, I mean, it really depends on the sector. Generally speaking, as you mentioned, the U.S. The earnings bit is actually quite good. I think it's generally because Q2 analysts has already put in a very, very pessimistic scenario. They have been expecting like 50% year-on-year down in earnings, but it turns out to be just slightly better, but it's still quite negative because of the COVID situation. But what we observe is that it is very dependent on the sector. You see, companies like Amazon, Microsoft, they do extremely well in the tech sector, which benefit a lot from COVID. But other sectors, as we see from yesterday, energy companies like BP, they have posted a large loss because of the impairment charges, because of the pessimistic outlook of the oil prices. So it really highly dependent on the sector. So we think it is very important to be in the right sector. And as mentioned, we like the tech and the healthcare sector, which are more the growth policy sectors in the market.
Jenna, I want to get your take on what's going on in the dollar. It had an absolute meltdown for the month of July. Right now, RSI, though, is near most oversold levels of the last decade. Do you think the dollar is going to bounce, or is it going to be really tricky to place ahead of the U.S. election?
So we have been saying that the dollar is likely to weaken. It is because the drivers of the strong U.S. dollar has been fading. So, I mean, there has been a huge interest rate differential between the U.S. and Europe, but that has narrowed significantly. That could narrow further, but the scope to do so is less. And the economic situation, the differential is less as well, because we have indeed seen more cases in the U.S. and the Europe data is getting better. So these macro and interest rate drivers have been reduced. So it is unclear, but we generally see that we have been saying that the dollar should weaken. But as you said, the dollar actually has weakened already. So we think that it could be, trading sideways for now until there's more clarity in the macro and the interest rate drivers emerge.
I just want to quickly update viewers on the Spain PMI numbers. We got manufacturing PMIs out. Now we're looking at services PMIs. In Spain, 51.9 is the reading. The forecast was for 52.3. And the composite now in Spain for Purchasing Managers Index rises to 52.8. That beats the forecast of 52 even. In terms of the European economic picture, we talked a little bit about the possibility of a decoupling. Do you see Europe doing better in the recovery than the U.S., or is the U.S. still going to reign supreme? You know, if we get this fiscal package at the end, is it possible for the federal system to do better than the social democrats of Europe?
I think that the recovery in the U.S. would be better eventually, because I think that it's just the U.S. consumption, it has potential, because it actually, if you look at the personal income data in the U.S., it has actually shot up quite substantially at one point to 15% year on year. So as long as we do get some extension of the extra unemployment benefit and another check coming through, another 1,200 check coming through, I'm quite confident that the U.S. consumers will be able to spend that better than the European counterpart. The European Recovery Fund, it is quite a substantial quantum, but ultimately there are some conditions attached to how the fund is being used and dispersed. So it is likely to be less dynamic in terms of U.S. in terms of the fiscal policy.
Janet, thanks so much for joining us. Janet Mui, Investment Director at Brewin Dolphin. Next time you're on, we need to talk about whatever happens out of the U.S., those checks, whether or not that's going to help continue the consumption we are seeing in the United States. Now, coming up, Microsoft co-founder Bill Gates says U.S. data from TikTok would be safe with the software giant. We'll hear more from that exclusive conversation right here. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 20 minutes into the session and looking at gains of more than 0.8% on the FTSE in London, the DAX in Frankfurt up 0.7, and the CAC 40 in Paris up almost 1%. So let's talk about Microsoft. It's carefully towed the line between Washington and Beijing for decades, but major hurdles remain as the tech giant works to satisfy both the Trump administration and the shareholders of Chinese parent ByteDance. Chinese TikTok parent ByteDance, I should add. Bloomberg spoke exclusively with Bill Gates. He is now the co-chair of the Bill and Melinda Gates Foundation, but of course also the co-founder of Microsoft, and he talked to us about the growing tech war and doing business with China.
Well, the whole situation is quite novel in terms of, what are the principles involved here? What principles should China apply to companies in China or the U.S.? Are those reciprocal and thought through and predictable? I'm not, at the company now. We've made investments in China. We have, engineers from all over the world, including in China. So Microsoft is very careful about its data promises, and we'll try to have strong relationships globally. We won't do things that are hostile, are viewed as hostile.
What about the app in general? Obviously, it's a very popular app. I mean, is this something that you would like to see in the Microsoft family?
Well, it's nice that TikTok's created some competition through innovation, and it doesn't seem like preventing that innovation from being available, that makes much sense when you want new things out there. I am not in the target audience, so I'm certainly not expert. I've gotten a lot of education from my youngest daughter about this and why she spends time on it. So, they did a great job on it, and there's a lot of ways to take it, and hopefully, that's allowed to happen in some form.
Let's talk about what's allowed. Is the Trump administration correct in trying to force this Chinese company, ByteDance, to sell TikTok's U.S. operations or even shut it down in the United States because it's Chinese? Should the company be subjected to that? I mean, 100 million Americans are using it.
What law? I mean, if this is such a clear thing, why wasn't it clear 3 months ago, 6 months ago? When people make investments, they should understand what's allowed, what's not allowed, and therefore what's the reciprocal principle involved in this thing. So, maybe I haven't read the right article. I don't understand what happened on Saturday, but anyway, I'm focused on the foundation and the pandemic, and I'll probably provide advice at some point, but I'm not at the center of this, the decision being made here.
I do want to quickly get your thoughts on the antitrust situation. Obviously, I'm sure that the hearings have been a bit of deja vu for you. Having gone through a lengthy review process yourself, do you look at companies like Apple and Amazon and Google and Facebook and think they've become too powerful? Is this an effective way to preserve competition?
Well, these companies are shaping the economy. So the idea that congressmen get a chance to talk to their leaders and try and understand how, what they're doing in terms of media and competition, that all makes sense. They were lucky there were 4 of them on the hot seat. I was all by myself with critics sitting next to me. So, hey, I guess we're getting nicer to CEOs than in the old days. I always felt going to Washington and talking about our values and what we did, was helpful, particularly, through this pandemic where these companies have done so well. Now understanding, what's it like to be an entrant into these markets. There's legitimate issues there that in a kind of a scattershot way did get raised.
That was Bill Gates, co-chair of the Bill and Melinda Gates Foundation, of course, Microsoft co-founder, speaking exclusively to Bloomberg. We have a lot of that interview throughout the entire day. Now, we're just 25 minutes into today's trading session. Let's take a look at some of your movers this morning. Bank of Ireland is on absolute tear this morning. It's up nearly 10%. This comes as they had an underlying loss of 669 million euros, a $1 billion impairment. But the CEO told Matt and I feeling more optimistic. Acker, though, to the downside, down more than 3%. They posted their first half net loss, also cutting 1,000 jobs. And B&W, Matt, more than 2%. It's lower this morning. First quarterly loss since the financial crisis in 2009. Matt, it's been a dismal quarter for the autos, which I know you've been keeping your eye out this entire season.
Yeah, well, every season, right? I'm always watching the auto industry very closely, partly as my job, partly just because I care about cars. Did I say something about Jim Farley becoming CEO of Ford? Did I say? I have been following, obviously, Ford for my entire life, and Jim Farley, who's been a tremendous car guy there, has been promoted to the position of CEO. It's fantastic news, I think, for the products. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are a half hour into the trading day right now, and we're looking at some headlines coming across from Sweden. A slew of Swedish economic data coming across, including June industrial orders rising 6.7% in the month. They have fallen 11.9% in the year, but there's a lot more there. And if you want to look more deeply into that, you can just type NI Sweden on your terminal. You can also type RIKS GO to see that the Riksbank is acting right now, and you can follow that along on the Bloomberg terminal. Now let's take a look at the Bloomberg, or at the Stock 600, I should say, benchmark index. And there's a Bloomberg screen, the group ranked returns that I want to pull up. There it is, showing you the different industrial sectors and how they're moving. Oil and gas, the biggest winner as the underlying commodity price rises and commodities in general rising, so basic resources are up as well. You can see food and beverage, the only loser today, although healthcare is perilously close as you look at most of the sectors winning today. Let's get the Bloomberg First Word News this morning. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. A massive explosion has rocked the city of Beirut. We warn you, the video we're about to show is dramatic. The blast erupted from Lebanon's main port. It was so powerful, it blew out windows across the capital and was even heard from Cyprus. The latest casualty figures are over 100 dead and 4,000 injured. Authorities say it was caused by highly explosive materials at the port, but they did not say if it was an accident or an attack. The US and China are planning to assess their Phase 1 trade deal this month. Sources tell Bloomberg the discussions between Trade Representative Robert Lighthizer and Chinese Vice Premier Liu He will take place around August 15th. It comes against a backdrop of rising tensions between the two countries. In the UK, lawmakers are urging Prime Minister Boris Johnson to be more open about the travel risks associated with the coronavirus. In a scathing report, a committee criticised the way ministers talked up an opportunity for a summer vacation, only to reimpose some restrictions without warning. Johnson has promised a public inquiry into the government's handling of the pandemic. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt and Marie.
Laura Wright in London, thank you so much. Now, the White House and the Democrats are aiming to strike a deal on virus relief legislation by the end of the week, but the two sides are still far apart on some key issues. Treasury Secretary Steven Mnuchin said they're, quote, not at the point of being close to a deal, but that they tried to agree to a timeline. It also follows a meeting with House Speaker Nancy Pelosi and Senate Democrat leader Chuck Schumer. For more, Bloomberg's Michelle Jamrisco joins us now. Michelle, is there a decent chance that we will see a deal actually finalized this week? And just run us through the sticking points.
Well, Anne-Marie, as you know, these sorts of negotiations are always near impossible to predict, so we could start to see developments hour by hour. And you mentioned some sort of vague language from both Treasury Secretary Mnuchin and others on the Democratic side, but at least they are both affirming that they're hopeful, that they've set this goal for the week's end. And it is also encouraging that the two sides are reportedly exchanging written negotiations at this point, so they're talking very seriously about where they still differ on different points of aid. But as you mentioned, plenty of sticking points to remain, including whether and by how much to extend unemployment insurance. There is fairly broad consensus on the need to continue that support for workers, but also a worry among some Republicans that if the benefits are too generous, then you may start to see some workers opt to stay home rather than try for another job that might not pay as much as those benefits. There is some urgency to extending those jobless benefits that have run out as of last Friday, and also to watch a few other things. On evictions, President Trump has pledged that some action will be taken to protect renters from being evicted at this time. And within Congress, there's a debate on state and local aid that Democrats want to include versus liability protections for employers that are favored by Republicans. So plenty at issue still, a lot to hammer through before a deal is reached. And it wasn't so long ago that I covered the U.S. economy, and just know that this can be a real rocky journey ahead.
Of course, the $64,000 question, Michelle, or $64 billion question, I guess, these days. What happens if they don't reach a deal by the end of the week?
Well, and we're dealing in trillions these days too, so the numbers are quite large. Politically, I think Trump has said he's weighing using executive powers to push through aid if no deal is reached by two sides by the end of the week, including on evictions, again, jobless benefits and the payroll tax. White House Chief of Staff Mark Meadows, though, said later that they were kind of holding off on those plans of using executive power for now. So we may or may not see some more, some more mulling of that route on that side. Meanwhile, the House is already out on August recess, and the Senate is set to start that recess on Friday. So regardless, lawmakers will have to adjust their schedules accordingly if talks continue to drag on. But more importantly, economically, I mean, that $2.2 trillion package passed in March it seems like a lifetime ago now. It's fading fast. And of course, businesses and workers alike are looking for at least a bit of uncertainty as to what, further support they might gain through the end of the year. And meanwhile, the economic data have not been very reassuring. We did have a good U.S. manufacturing report earlier this week, but most of the figures have been pretty bad, including on the labor market, which we get another jobs report Friday, and that might ramp up some pressure to find more fiscal support, as has been heard from the Federal Reserve officials this week, that we really need to get more support out to the economy.
Michelle Jamrisko, thank you so much for joining us. Hopefully we'll have you back and potentially we'll see a fiscal deal. Now, we just had some breaking news we want to bring to you, and this comes from China. They lodged representatives to the U.S. over this Taiwan visit. They're also saying that Taiwan is the most important issue in relations with the United States. This comes after the fact that we've learned that Alex Azar, who's the Health and Human Secretary of the United States, he is going to Taiwan to discuss COVID-19 and the international response. It's the most senior U.S. official to visit Taiwan since 1979. And we are now getting China's response to that, and they say they oppose this official interaction between the United States and Taiwan. They also say that Michael Pompeo, his remarks on the Hong Kong-related affairs are, quote, wrong. And we'll obviously be keeping a close eye on all of this, especially as trade negotiations and trade talks also continue in the month of August 15th. So a lot going on between Beijing and Washington. Now, coming up, a massive explosion at Beirut's main port rocks the city, leaving more than 100 people dead. We'll bring you the very latest from Lebanon. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 40 minutes into the session right now, and we're looking at gains that are increasing throughout the early trading, now up more than 1% across all of the major equity indexes here in Europe. Let's get over to Bloomberg, to Laura Wright for the Bloomberg Business Flash in London. Laura?
Thanks, Matt. Disney is doubling down on its streaming business. Its blockbuster live-action remake of Mulan will now go straight to Disney Plus, bypassing cinemas. It will be a pay-per-view film priced at about $30. The entertainment giant posted a surprise profit for the quarter. The gain was driven by deferring payments to Sports League due to cancelled games. Commerzbank has abandoned its goal for a full-year profit. That's due to losses tied to Wirecard as well as surging bad loan provisions. It comes as the lender seeks to emerge from a leadership crisis. This week, the lender appointed a new chairman, but it's still looking for a CEO who can navigate the conflicting demands of shareholders. Rents for homes in London are set to slump to the lowest level in nearly 6 years. That's as a slow reopening of the economy is weighing on demand. The capital has already seen a 3% drop during the first half, and according to a report from the property website Zoopla, they could fall 5% this year. That's your Bloomberg Business Flash. Anne-Marie, Matt.
Laura Wright in London, thank you. Now, let's get the latest from Lebanon. When we warn you, the video we are about to show you is quite dramatic. There was a massive explosion at Beirut's main port, and that has rocked the city, killing more than 100 people and overwhelming hospitals. Authorities say it was caused by highly explosive materials at the port, but didn't say whether it was an accident or an attack. Joining us now is our Middle East executive editor, Riyadh Hamadeh. Riyadh, what do we know about the cause right now? We're seeing these really horrific and tragic pictures coming out of Beirut.
The government is blaming ammonium nitrate that was stored at the port. They say that that consignment was there for at least 6 years. And I think they're also indicating that they're looking into why it was stored there, how it was stored there, and also, of course, they'll be investigating what ignited it in the end, if it's confirmed that that is indeed what happened.
So the horror is made worse by the fact that Lebanon was already in a really bad economic situation. It's obviously been mired in political difficulties for decades now. What's the situation like, Riyadh, right now in the country?
You're absolutely right, Matt. Lebanon was already in deep trouble. Its currency was losing value, almost 80% of its value lost. You had inflation, hyperinflation. You had political upheaval, demonstrators on the street, and you had great concern that the Lebanese economy was going to collapse completely. So already Lebanon was going to was struggling already with getting imports into the country, food imports. It relies heavily on imports, Lebanon. So now, for example, the loss of its major port is very likely to weigh heavily. The loss of all the material, all the goods that were stored at the port is likely to weigh heavily. And with a country that was struggling to pay for its imports, pay for fuel, for electricity, for example, this is really a terrible time for such a serious event.
And Riyadh, what about the IMF talks? Bring us up to date.
Well, the IMF talks have been going on for a while, but they've been stuck. They've been stuck because, for various reasons. One, there seems to be an inability to agree on the type of reforms that are needed, because Lebanon for sure needs serious reforms in the way it runs its government, it runs its finances. And the second thing is they can't even agree on exactly how big the financial losses are that Lebanon is suffering or has suffered. So for the IMF, that has put them in a rather difficult position because they're going to hesitate to provide the financing that Lebanon so desperately needs if there isn't even an agreement on how deep the hole is that Lebanon is in.
All right, Riyadh, thanks very much for joining us. Our Middle East executive editor, Riyadh Hamadi, talking to us about this terrible tragedy in Beirut. Up next, we talk more about European economic data and the upcoming German services PMI numbers. We have the return of Richard Jones from the MLive team. This is Bloomberg.
Welcome back to the European Open. We're 48 minutes in today's trading session. You're seeing green arrows across the continent this morning with the DAX at more than 1%. Now, BP slashed its dividend for the first time in a decade and set out new targets to accelerate its shift to greener energy after the coronavirus pandemic upended the oil business. Bloomberg's Alex Steele spoke to the oil giant CEO, Bernard Looney.
We had a strong quarter, a very strong quarter. I think we called it an exceptional quarter in trading. It was one of the few highlights of the business in the second quarter. We're very fortunate to have an incredible trading organization that's global. I don't think that level of performance is rateable. The second quarter was probably one of the most challenging quarters in our industry's history. And it played well in a market where there was a contango. It played to people who have deep capabilities like we do. It plays to people who have infrastructure positions like we do. So a very strong quarter, but not one that we would expect to be repeated.
All right, fair. What I also was struck with yesterday is when you guys were talking about returns, and this brings into account commodity prices, is that by your own admission, you basically say that power projects make a lower return for oil and gas investments, but overall you still see higher returns of 12 to 14%. How much of that, though, is 100% predicated on, say, $60 oil, and what happens if we stay at 45?
Yeah, it's a good question. I mean, yesterday we laid out that the distribution policy and our commitment to shareholders has sort of three elements to it. Number one, committed distributions, which is a reset dividend and a commitment to do share buybacks. The second is profitable growth, which is the returns growth that you mentioned, as well as EBITDA per share growth. And the third is around sustainable value, where we're actually saying here's an opportunity to invest in a company that is decarbonizing and helping the world decarbonize. On returns, I think in the early part of this decade, it's driven very much by our existing hydrocarbon business. As we head into the second half of the decade, you will see that those new businesses come to the fore. We're optimistic about what we can do in this space. We've said that we expect to go from about 2.5 gigawatt of power to 50 gigawatts. We've talked also, it's not just about renewables, it's about the consumer and the mobility into the business, which we said yesterday is probably in the region, Alex, of 15 to 20% return. So our transition story is not just a renewable energy story, it is also a consumer story, it is also a mobility story. And, you know, people may not know, BP sells coffee. We sold 150 million cups of coffee last year. That's a third as much as Costa does. This is a very strong business. It's a growth business. We're going to go from 10 million customer touch points a day to 20 million over the next decade. So we're as excited about that as we are about the low carbon energy part.
But Bernard, don't you still need $60 oil to make all that happen? Because you need the cash flows from your oil and gas assets to make all this work.
So what we did, Alex, with the distribution policy reset is what we wanted to do is consistent with strategy. And this decision was rooted in strategy, absolutely rooted in strategy. We want to become an integrated energy company. We need to invest into the transition. To do that, we want to be able to do it at a range of prices. And what we set out yesterday is a framework, a financial framework that has a balance point of $40 oil. So we can do these things at $40 oil. And by the way, if oil is less than $40, we will take actions to preserve that. So what we've laid out is a very resilient distribution policy that enables us to invest into the transition while giving shareholders a fixed dividend and the potential for at least 60% of buybacks if there is excess cash flow.
And that was Bloomberg's Alex Steele speaking to BP's CEO, Bernard Looney. Now, joining us from, I always want to say Canada, via London, via Berlin, is our MLive FX and rate strategist, Richard Jones. Richard, I kid, but you've got, work experience in banks across continents. Now you're here with us in Berlin, and we're seeing something that is historic. The real yields are very negative in the U.S., and Hillary had a chart. I think it's 57.45. It shows the entire Treasury curve all the way up now to 20 years is below 1%. What does this mean?
Yeah, good morning, Matt. Yeah, and I definitely am in Berlin. I'm not speaking to you from Canada right now because it would be very, very early in the morning over there. But I think what these bond yields are telling us, and these negative real yields are telling us, is that the bond market does not see the worst of the pandemic being over, and that the move lower that we've seen over the past couple of months in these bond yields is saying that we've got some pretty difficult economic circumstances in the coming months, and that the actual nominal bond yields are going to continue to make new record lows by the end of the year. I think the big challenge for all these developed economies is that the unemployment rate remains too high, and if you're looking at all the PMI readings that are coming in this morning and over the past couple of days, it's still showing a trend of job losses across manufacturing and services industries. And with these virus outbreaks and subsequent restrictions being put in place, it's preventing a steady recovery. So I think the bond yields are telling us that we're not through the worst of everything yet. I think we still have some economic challenges ahead, and that these yields are going to move lower by the end of this year as well.
Richard, good morning. It's Anne-Marie in London. Also, the volatility on the Treasuries near lows on record. Jeffrey Gundlach compared this to the Death Valley, descending into the Death Valley from California's Mount Whitney. Is this the calm before the storm of a further rally? And where do you see us going year end? Well,
I think that it has really been, since the beginning of June. So I think we had a little bit of two-way price action in May. But since the beginning of June, yields have just been grinding lower. And I think that's why the volatility is being depressed. And I think this is a trend that's going to continue because the problem is, as I said, is that we've still got unemployment being way too high in the U.S.
I'm placing a new order to buy Japanese yen at 105,643. So order placed to buy Japanese yen at 105,643.
Shaped economic recovery. I'm hearing less and less of that, and I think what the bond market is telling us is that this V-shaped economic recovery is a fallacy, and that it's going to take a lot longer to get back to where we were before the pandemic.
Richard, we're just seeing German July services PMIs come across 55.6. The preliminary number was 56.7, so it's a little under that. The composite is 55.3, and we've seen PMIs, services PMIs now from Spain as well. What do you think about the PMI numbers that we've seen? Manufacturing already out, services coming out now.
I think they're clearly getting better, Matt.
And Richard, by the way, how key is this PMI data for an economist and for a trader like you?
Well, I think it's interesting because there's a lot of forward-looking elements to it, and I think it does reflect sort of the most recent survey responses from those various industries. I think it's interesting because we're seeing a bit of a dichotomy between the actual headline numbers improving and they're heading in the right direction. And you'd expect that given all the fiscal and monetary stimulus we've seen. But despite that, you're still getting firms reporting that they're cutting jobs even as those numbers improve. I've sort of banged on about the job losses a bit, but I think it's critical that we actually get job creation happening rather than job losses happening in order for this recovery to take place. And we're not seeing it from these PMIs yet.
Richard, we're going to have to leave it there, but we'll have you back. Richard Jones, MLive FX and rate strategist, joins us from Berlin. It's a risk-on morning. Good morning. This is Bloomberg.
Beirut is rocked by a massive explosion at its main port, killing at least 100 and injuring thousands. Authorities are yet to confirm what caused the blast. Commerzbank cuts its outlook. The German lender abandons its goal for a full year.
Long on Japanese yen at 105,643.
Surveillance, everyone. I'm Francine Lacqua here in London. The markets have a clear risk-off feeling to them. Now, what they're looking at is a couple of the earnings results. What they're looking at also is a price of oil. Gold actually topping 2,000, so it's interesting because you have gold topping 2,000, but at the same time, European stocks also gaining. So it's a risk-off mood. Again, quite high volatility for the month of August. If you look at the 10-year Treasury yield, it's pretty much steady near the lowest since March. There are signs that American lawmakers are making progress on an economic aid package. Now let's get straight to the Bloomberg. First Word News here in London is Laura Wright. Hi, Laura.
Thanks, Francine. The White House and Democrats hope to have a deal on a new relief package by the end of the week. That's the latest from U.S. Treasury Secretary Steve Mnuchin. The two sides remain far apart on some key issues, but they appear to be moving closer to an agreement. Any vote on a deal likely won't happen until next week. The US and China are planning to assess their Phase 1 trade deal this month. Sources tell Bloomberg that discussions between Trade Representative Robert Lighthizer and Chinese Vice Premier Liu He will take place around August 15th. It comes against a backdrop of rising tensions between the two countries. In the UK, lawmakers are urging Prime Minister Boris Johnson to be more open about the travel risks associated with the coronavirus. In a scathing report, a committee criticised the way ministers talked up an opportunity for a summer vacation, only to reimpose some restrictions without warning. Johnson has promised a public inquiry into the government's handling of the pandemic. Disney is doubling down on its streaming business. Its blockbuster live-action remake of Mulan will now go straight to Disney Plus, bypassing cinemas. It will be a pay-per-view film priced at about $30. The entertainment giant posted a surprise profit for the quarter. The gain was driven by deferring payments to sports leagues due to cancelled games. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now let's get the latest from Lebanon. A warning that the video we're about to show is dramatic. A massive explosion at Beirut's main port has rocked the city, killing over 100 people and overwhelming hospitals. Authorities say it was caused by highly explosive materials at the port, but did not say whether it was an accident or an attack. Well, joining us from Lebanon is our reporter, Lynn Nuhed. Lynn, good morning to you. I know it's you know, the pictures are so dramatic. Do we know what the cause is yet? Lynn, I don't know if you can hear us. Otherwise, we'll get back to Lynn. Sometimes the phone connections are also very difficult. Lynn, we'll get back to you, and we'll hear, of course, the latest of what we know about that blast in Lebanon. Now, car parts giant Continental says it expects a challenging third quarter. The German company plans to save around 25% in investment expenses this year and expects revenue and earnings to fall significantly. Earlier in the crisis, it said it would cut its dividend payout to about 350 million euros. Well, joining us now is Volkan Schaefer. He's the Chief Financial Officer of Continental. Mr. Schaefer, thank you so much for joining us. What can you tell us about how the pandemic will change your company?
Well, the second quarter was obviously very difficult, 40% decline in sales, negative EBIT. The only good thing which we could say at the moment is that consecutively from April, May, June, sales were starting to increase. I can include July there, but still third quarter will be clearly below the numbers which we have seen a year ago. And for the midterm, this is your question, I think we do expect that the world car production will be for some years clearly below that level which we have seen in 2017. So there is a structural change for some years to be expected before we are back to the old levels of 2017.
When will that be, Mr. Schaefer? Do you have any idea of when we'll get to a more normal market?
Well, probably then the lower level markets will be the normal markets. And as I mentioned, our expectation is it will take 4 or 5 years before we are back to those levels we saw in 2017, 2018.
In the meantime, what happens to the auto sector in general? Will there be more demand from certain countries than others? How do you see that panning out?
For the moment, we do see that China is the region which is recovering fastest. We have had some months where the car production in China was even above the level of the prior year. Some incentive programs on provincial level, on local level, regional level help, but this seems to be the region which is coming best back to type of normal, while Europe specifically and the US clearly in the third quarter still will be below what we have seen in 2019.
Can you give us an update on plans to widen some of the restructuring measures? What exactly are you looking at now?
Well, we are actually taking all the information and scenarios into account, which we are building now for the next years to come world car production and by that business potential for us. And as I mentioned, we expect this to be below the level we have expected half a year ago only. And therefore, we have to adjust our overall cost structure to these new normal development over the next years. Give us some months before we come up with a final view on that and the measures which we will take and have to implement to make sure that we can then grow with the markets in the future on a lower level than we had expected some time ago.
It seems that there's a trend to have more local supply chains. How does that affect Continental?
Stop on profit for Japanese yen at 105.663. Okay, I placed stop on profit for Japanese yen at 105.663.
And it is much more discussed than we have discussed it some time ago.
Mr. Schaefer, are you considering acquisitions to actually expand what you're doing for connectivity?
We are looking at potential strategic acquisitions in all fields, in all those fields, which could help us to strategically position the group even better for the future development than now. And this includes connectivity, which is a strong growth area in the car, as the car has to get more and more outside information, is doing functions no longer inside but outside on computers and get the information back into the car. Strong growing field, but it is not limited. M&A, potential M&A deals will not be limited to this field only.
Thank you so much for joining us. Wolfgang Schäfer there, the Chief Financial Officer of Continental. Now, coming up later today, we'll get the latest on the pandemic from Dr. Anthony Fauci. Up next, we'll also get back to the markets. This is Bloomberg.
Moving further, my profit to 105.673. Top on profit, I moved up for Japanese yen at 105.673.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the White House and Democrats hope to have a deal on a new relief package by the end of the week. That's the latest from the U.S. Treasury Secretary Steve Mnuchin. The two sides remain far apart on some key issues, but they appear to be moving closer to an agreement. Any vote on a deal likely won't happen until next week. Well, joining us now is Ian Shepherdson. He is founder and chief economist at Pantheon Macroeconomics. Ian, always great to catch up, so thank you so much for coming on Bloomberg Surveillance. When you look at the steps that we're making towards a stimulus in the U.S., how important is it that we get something sooner rather than later, even if maybe the amount is, comes short of some expectations?
Yeah, well, remember the enhanced unemployment benefits, the extra $600 a week that have been given to about 30 million people since the pandemic began. They expired July 31st. So right now we are in, well, it's an interregnum at the very least for an awful lot of people who've been relying on that money to pay the mortgage, pay the rent, make the car payment, make the credit card payment, buy food, everything. So without that, without those enhanced benefits, those people are seeing an enormous cash flow drop right now. And so it's imperative that Congress gets its act together before the recess, because they're supposed to disappear for 3 weeks on August 10th, in order to restore at least some of that money. I think even Democrats don't expect to see a full restoration. There's going to be some reduction. But the Republicans wanted to cut the $600 a week to $200 a week, and that's too low. So I'm expecting we'll eventually get a compromise. The sooner the better, really.
Will the compromise be enough to keep the U.S. economy afloat, Ian, or do you have concerns that actually, there'll be some real blind spots?
Well, there's already clear evidence of a flattening, but the flattening that we've seen in most of the short-term indicators is probably simply a reaction to people, or a consequence of people choosing to stay home more in the southern and western states that have been hit hardest by the second wave. What we're scared of now is something different, and that would be a step down in spending because of the end of the enhanced unemployment benefits. And it's worth about 3.5% of weekly GDP. So this is it's a big chunk of the economy to lose, because so many people have been getting this benefit. As I said, it's about 30 million people. So almost 1 in 10 Americans have been getting this, and it's just stopped dead. So it would make a material difference. And potentially, if it persisted for more than a couple of weeks, it would transform that sort of flat trend in the real-time indicators into an ambiguous downward trend, because there's no way we can find 3.5% of GDP just from nowhere. And so this is why Congress is now so motivated. I mean, both sides realize, apart from perhaps some of the wilder fringes of the Republicans, that they have to do something. The election's only 90 days away now, and to allow the economy to fall into another hole entirely unnecessarily just doesn't make any sense. So I do expect a deal, but getting there is really painful.
Ian, depending on the kind of deal we get, who will people blame for it if it's not enough? And what does that mean for the U.S. election?
Well, usually the principle is that whoever's in power gets blamed when things go wrong. And I think that's what's focusing Mitch McConnell's mind very clearly now, is the idea that Republicans, they're already in trouble in the Senate. And of course, we know that Trump is behind in the presidential polls. But what McConnell really cares about is the Senate. And Republicans are really terrified now that something they thought was safely theirs is slipping out of their grasp. And I think he appreciates that they'll be the ones who take the blame. Because remember, the House has already passed a $3.5 trillion relief bill back in May. And the Republicans do look rather negligent, having sat on that for 2 months and done nothing, thinking maybe that a second wave wouldn't happen and it wouldn't be needed. But the second wave is now blindingly obvious. And so everyone knows that something needs to be done. But they've left it very late. And with the recess coming and about 20 Republicans, as McConnell has said, resistant to doing anything, he's going to have to do a deal that reaches across the aisle. And that's very difficult. Splitting your own party is very difficult. But I don't really think he's got a choice at this point.
Where will we see the biggest scarring? Unemployment or consumer spending?
Well, I think we'd see it first in the consumer spending numbers, because we get a lot of data that's almost real time now, that all these things on restaurant diners, and we get weekly chain store sales, we get weekly hotel data, we get daily air travel data. So we've got a lot of signs that can tell us pretty much immediately where the spending is being cut. But of course, the consequence of that will be that if we see a sustained drop in spending, then hiring will drop as well. Now, right now, to be truthful, nobody really knows what's happening to payrolls and unemployment because the data are so contradictory. We've got surveys going up, surveys going down, and surveys going sideways. So pay your money, take your choice. But whatever the position is, it will get worse if there is not another stimulus bill. There's no question about that.
Ian, very quickly, what happens to dollar in all of this?
Well, I think the weakness probably persists a while longer yet. You know, a country that's suffering from a horrible second wave of COVID and is about to do a lot more stimulus is probably not a country that has a strong currency. So with Europe doing better, my guess is that the dollar is likely going to be under a bit of downward pressure for the foreseeable future. But I don't see this as the end of King Dollar. The dollar is still the reserve currency for the world. That's not going to change.
Ian, thanks so much. Ian Shepherdson there from Pantheon Macroeconomics stays with us. Now let's get back to the latest from Beirut. Joining us now, we hope, from Lebanon is our reporter Lynn Nuyed. Lynn, if you can hear us, what do we know about the cause of the explosion?
Hi there. I can hear you finally. You know, we're still trying to find out what happened, but the latest is that there were roughly 2,700 tons of ammonium nitrate stored at the port that had been confiscated from a ship several years ago. And what everyone is trying to figure out now is why they were at the port, why they hadn't been sold or auctioned off or destroyed or, you know, moved elsewhere, and why such a large amount of explosive material was being kept in this unsafe environment. But that appears to be the cause of the explosion, and obviously ammonium nitrate is a component that's used in some explosives, and that basically explains the
Lynn, I think we've just lost Lynn. I mean, we have to understand that, of course, there are, you know, about 100 dead, 4,000 people injured, and the phone lines aren't as great as they were just 48 hours ago. So, you know, we'll get back to Lynn to also try and understand how this Beirut explosion will actually worsen the crises that we've seen in Lebanon. One of the things that we've been talking about quite a lot is, of course, if you hit the port, which is the main point of trade for cargo to come in and out, this could affect also the economy, apart from the loss of life, quite a lot. So we'll get more on Lebanon and those horrible explosions yesterday. Coming up, we talk about banks, and Commerzbank cut its profit outlook amid surging bad loan provisions. We'll hear from the lender's chief financial officer later in the program. This is Bloomberg.
I'm placing my stop on profit for Japanese yen up, moving up to 105.693. Okay, it will give us £500 in profit.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the U.S. and China are planning to assess their Phase 1 trade deal this month. Sources tell Bloomberg that the discussions between Trade Representative Robert Lighthizer and Chinese Vice Premier Liu Hu will take place around August 15th. Now, it comes against the backdrop of rising tensions between the two countries. Joining us now is Ian Shepherdson. He's founder and chief economist at Pantheon Macroeconomics. Ian, we were talking a little bit before about the stimulus and some of the concerns about jobs and when things get more back to normal in the U.S. There's this added layer of uncertainty given that, there's a fight with China, which is not only over trade. How much does that hurt the world economy and the U.S. economy specifically?
Well, it was hurting long before COVID struck. We'd seen real disruptions to trade flows. We'd seen uncertainty raising costs for businesses. We'd seen businesses having to find new supply chains because they became worried about their Chinese counterparts, or simply because it was costing them too much via tariffs to use China to source parts and equipment and supplies. So we'd already seen substantial disruption. You could see that in the business surveys. You could see it in the employment and production data. It was a real drag. And then on top of that, of course, COVID has just exploded everything. But once COVID goes away, the China trade war will still be with us. Now, of course, that depends on timing, because if there's a COVID vaccine at the end of this year and then Joe Biden's president in January, I think we'll have a very different U.S.-China relationship in the new year. If Trump is reelected, then I expect that the trade war will just drag on endlessly. But it's really tragic because it's just an act of self-harm from the U.S. perspective, because Americans are paying the tariffs. No matter how many times Trump says China's paying it, Americans are paying the tariffs. So effectively, it's a tax increase on the one hand, at the same time that the Senate and Congress is throwing money at the economy effectively to try and limit the damage. So what one hand is giving, the other hand is taking away. The stimulus, of course, is substantially positive in net terms, but the China drag is just a completely unnecessary hit on an economy right now that just doesn't need it, that's for sure.
Ian, if you look at the Chinese economy, does it seem, the figures that are slowly coming out points to an economy that's getting back on its feet. Is there anything that makes you worry longer term?
Well, China, it definitely is getting back on its feet. China dealt with the COVID outbreak much earlier, having had it earlier than everybody else. But the numbers are clearly improving across the board. The threats, of course, are a second COVID wave in China on a substantial scale. We've seen little outbreaks, but nothing very serious so far. That's a threat that hangs over everyone until there's a vaccine. And then, of course, there's the longer-term picture in China, which is essentially a story of excessive debt. And a banking system that ultimately will struggle under the weight of that debt, which is already dampening growth and dampening future productive potential, coupled with very unfavorable long-term demographics. It's very easy to build a medium-term bear case for China. But of course, markets talk a lot about the medium term, but they exist in the short term, and the short-term picture is still, I think, pretty China favorable.
Ian, if we have rampant inflation around the world, given all the stimulus, where do you see it first? I don't think we will get actually inflation.
Yeah, this is a question that is sort of bouncing around. Everyone asks it. No one really has the answer. The only thing I can say for sure is that we've seen an enormous increase in the money supply everywhere across the world because of the huge increase in public debt required to finance the stimulus. And when the economies normalize, which will be after a vaccine, so maybe early next year, middle of next year, then all that increase in the money supply will still be there, floating around. Now, you don't have to be a monetarist to think that if you've increased the money supply by 20%, which is roughly what the US has done, for example, then sooner or later that's going to create some sort of inflation somewhere. And I would look for it first in the US, but not yet. This is a story for next year, I think, at the very earliest.
Ian, thank you so much. Ian Shepherdson there from Pantheon Macroeconomics. Coming up, but we talk about the Bank of England and more monetary easing. This is Bloomberg.
Moving up again, I stop on profit for Japanese yen to 105,713. So if it will reach this level and the price will be executed, the profit will be £700. Hopefully everybody understands, yeah? Okay, let's see.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. A massive explosion has rocked the city of Beirut. We warn you, the video we're about to show is dramatic. The blast erupted from Lebanon's main port. It was so powerful, it blew out windows across the capital and was even heard from Cyprus. The latest casualty figures are over 100 dead and 4,000 injured. Authorities say it was caused by highly explosive materials at the port, but they did not say if it was an accident or an attack. The US is planning the highest level visit to Taiwan since Washington cut ties more than 40 years ago. Health and Human Services Secretary Alex Azar will lead the delegation. It will discuss the global response to the pandemic and deliver medical supplies. It's the latest signal of US support for Taiwan in the face of increasing pressure from Beijing. China views the island as part of its territory. The question for any deal to buy TikTok's US operation is, how much are they worth? Analysts have pegged the value anywhere from $20 billion to $50 billion. Microsoft has just 6 weeks to work out a deal that satisfies both the Chinese parent company ByteDance and the Trump administration. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
I closed my position on Japanese yen at 105,713. Have £700 in profit. Hey, Gazim. No, this position is closed. I just closed a couple of minutes ago. Made a profit £700.
Still with us, Ian Shepherdson from Pantheon Macroeconomics. Ian, when you look at the Bank of England, what options do they have?
Well, given where rates are, it's the same option that every other central bank has, which is to do more quantitative easing, which can take various forms, of course, government debt or mortgages or other forms of private debt, or I suppose in the worst case, catastrophic scenario, even equities. I mean, the Bank of England's not at that point, but rates are at rock bottom. So further stimulus is more QE or perhaps some sort of enhanced forward guidance, which is what the Fed's about to embark upon. But right now, the UK is kind of in a similar position to the US, where the initial rebound has not morphed into the V that everybody hoped for, with our fingers all crossed. It's clear now that it's going to be a much longer slog to get the economy back to something like normal. It's going to be, yet again, a post-vaccine story. Right now, we don't have a vaccine, so we need pretty much endless support from central banks and from fiscal authorities.
Ian, when you look at the case for negative rates, do you see Bank of England actually going to negative rates, and what does that mean for the UK economy?
Yeah, I really hope not. I'm not a big fan of negative rates. I think they're very distorting. I think they baffle and scare the public. I think that they are very awkward for the financial system. And this is clearly a lesson from other countries which have tried negative rates, is that they're a very mixed blessing. So I don't think the bank is on the verge of heading there. I don't think it would probably make much difference to the economy. The real stimulus, given the scale of stimulus that's required to get economies out of the sort of holes that they're in now, this tinkering around the edges and pushing rates a little bit below zero would cause a great deal of disruption and probably wouldn't make a massively material difference to the economy. This really is a sort of situation where you need the fiscal authorities to step up to the plate, because that's where the really big bang can come from. And of course the UK government, along with other developed economies, has been fairly aggressive on the fiscal front. But I'm really disturbed and slightly depressed by the talk now about having to scale back on things and seeing the deficit hawks starting to pop their heads up again. To me, this just doesn't make any sense at all. We can worry about the debts and the deficit once we've got a vaccine and the economy is normalized. The time to worry is not now. We need to do more, not less.
What do you do with Brexit, depending on what kind of outcome we get with Brexit?
Well, a delay at the end of the year is obviously the optimum policy from the perspective of the economy. The question is whether that's deemed to be politically acceptable. Of course, all the talk now is that it isn't, but as we know, talk, especially from Boris Johnson, is very cheap. And I wouldn't be at all surprised if there was an extension at the end of the year, having got right up to the brink. Because to pursue, an uncontained Brexit catastrophe just makes zero sense for an economy that's already been shattered by COVID. If you look at polling of what people are worried about, Brexit has fallen a long, long way down the list, and obviously COVID and the economy has gone up substantially. So the opportunity, I think, is there for the government to push for a deadline eventually. I don't think there'd be a huge political blowback for it. I think most people would be relieved and take a view that it was a sensible thing. But of course, Johnson would have to persuade some of his more extreme Brexiteers in the Conservative Party, and I think he probably can't do that until we get right up to the wire. So we have to bite our nails till the end of the year, but I think ultimately we'll end up asking, groveling, begging for an extension. We'll probably get one.
Ian, thanks so much. Ian Shepherdson there from Pantheon Macroeconomics joining us today. Now, Microsoft has carefully towed the line between Washington and Beijing for decades, but major hurdles remain as the tech giant works to satisfy both the Trump administration and the shareholders of Chinese parent ByteDance. Bloomberg spoke exclusively with Bill Gates, the co-chair of the Bill and Melinda Gates Foundation and Microsoft co-founder, about the growing tech war and doing business with China.
Well, the whole situation is quite novel in terms of what are the principles involved here? What principles should China apply to companies in China or the U.S.? Are those reciprocal and thought through and predictable? I'm not, at the company now. We've made investments in China. We have, engineers from all over the world, including in China. So Microsoft is very careful about its data promises, and we'll try to have strong relationships globally. We won't do things that are hostile, are viewed as hostile.
What about the app in general? Obviously, it's a very popular app. I mean, is this something that you would like to see in the Microsoft family?
Well, it's nice that TikTok's created some competition through innovation, and it doesn't seem like preventing that innovation from being available, that makes much sense when you want new things out there. I am not in the target audience, so I'm certainly not expert. I've gotten a lot of education from my youngest daughter about this and why she spends time on it. So, they did a great job on it, and there's a lot of ways to take it, and hopefully, that's allowed to happen in some form.
Let's talk about what's allowed. Is the Trump administration correct in trying to force this Chinese company, ByteDance, to sell TikTok's U.S. operations or even shut it down in the United States because it's Chinese? Should the company be subjected to that? I mean, 100 million Americans are using it.
What law? I mean, if this is such a clear thing, why wasn't it clear 3 months ago, 6 months ago? When people make investments, they should understand what's allowed, what's not allowed, and therefore what's the reciprocal principle involved in this thing. So, maybe I haven't read the right article. I don't understand what happened on Saturday, but anyway, I'm focused on the foundation and the pandemic, and
Well, what can you say? The indicator gave us another buy signal for Japanese yen at 105.672. So I am placing an order to buy again Japanese yen at 105.672.
Facebook and think they've become too powerful. Is this an effective way to preserve competition?
Well, these companies are shaping the economy. So the idea that congressmen get a chance to talk to their leaders and try and understand how, what they're doing in terms of media and competition, that all makes sense. They were lucky there were 4 of them on the hot seat. I was all by myself with critics sitting next to me. So, hey, I guess we're getting nicer to CEOs than in the old days. I always felt going to Washington and talking about our values and what we did, was helpful, particularly, through this pandemic where these companies have done so well. Now understanding, what's it like to be an entrant into these markets. There's legitimate issues there that in a kind of a scattershot way did get raised.
Well, that was Bill Gates, the co-chair of the Bill and Melinda Gates Foundation and Microsoft co-founder. Now let's get back to earnings, and Commerzbank cut its goal for full-year profit as a Wirecard scandal adds to the pandemic pain. Well, we've been speaking to the lender's chief financial officer.
Well, first of all, Q2, we have shown a profit. So that's already important. And I mean, for the full year, we said already in the Q1 announcement that it would become much more aspirational to reach a positive net income given the corona impact.
We opened new position on Japanese yen at 105.672. Okay.
Q3 or Q4 further restructuring charges to really make progress on our cost reduction program. And that all in all brings us to a negative net income for this year.
In terms of, Bettina, the Wirecard story, before you were CEO at Commerzbank, long before, journalists were writing stories about the problems at this bank, and the amount of smoke coming from the company meant pretty much everybody should have known there was fire. The regulators certainly didn't seem to wise up to that until far too late. Neither did the government. What do you think needs to change so that we don't have another case where a German DAX company, misplaces more than 2 billion euros?
I mean, the discussion is ongoing, and I will clearly not comment on single cases from our side. But what I can say as a general thing is that clearly, I mean, one is the question on how do you regulate, for example, payments providers, and that is something which needs to be discussed by regulator and politicians. And on the other side, I think everybody has to ask who's involved in cases like that. What have been the red flags, and have we dealt correctly with the red flags which were out there? And that is something which will happen over the next weeks and months, I'm pretty sure.
Well, that was the Commerzbank Chief Financial Officer, Bettina Orlopp. Now, coming up, Disney gets down to business. The entertainment giant tops earnings estimates and plans an online debut for its live-action remake of Mulan. We have the details next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now, BP has slashed its dividend for the first time in a decade, and the virus upended its oil business. Well, we spoke to the oil giant's chief executive, Bernard Looney.
We had a strong quarter, a very strong quarter. I think we called it an exceptional quarter in trading. It was one of the few highlights of the business in the second quarter. We're very fortunate to have an incredible trading organization that's global. I don't think that level of performance is rateable. The second quarter was probably one of the most challenging quarters in our industry's history. and it played well in a market where there was a contango. It played to people who have deep capabilities like we do. It plays to people who have infrastructure positions like we do. So a very strong quarter, but not one that we would expect to be repeated.
All right, fair. What I also was struck with yesterday is when you guys were talking about returns, and this brings into account commodity prices, is that by your own admission, you basically say that power projects make a lower return for oil and gas investments, but overall you still see higher returns of 12 to 14%. How much of that, though, is 100% predicated on, say, $60 oil, and what happens if we stay at 45?
Yeah, it's a good question. I mean, yesterday we laid out that, the distribution policy and our commitment to shareholders has sort of three elements to it. Number one, committed distributions, which is a reset dividend and a commitment to do share buybacks. The second is profitable growth, which is the returns growth that you mentioned, as well as EBITDA per share growth. And the third is around sustainable value, where we're actually saying, here's an opportunity to invest in a company that is decarbonizing and helping the world decarbonize. On returns, I think in the early part of this decade, it's driven very much by our existing hydrocarbon business. As we head into the second half of the decade, you will see that those new businesses come to the fore. We're optimistic about what we can do in this space. We've said that we expect to go from about 2.5 gigawatt of power to 50 gigawatts. We've talked also, it's not just about renewables, it's about the consumer and the mobility into the business, which we said yesterday is probably in the region, Alex, of 15 to 20% return. So our transition story is not just a renewable energy story, it is also a consumer story, it is also a mobility story. And people may not know, BP sells coffee. We sold 150 million cups of coffee last year. That's a third as much as Costa does. This is a very strong business. It's a growth business. We're going to go from 10 million customer touch points a day to 20 million over the next decade. So we're as excited about that as we are about the low carbon energy part.
But Bernard, don't you still need $60 oil to make all that happen? Because you need the cash flows from your oil and gas assets to make all this work.
So what we did, Alex, with the distribution policy reset is what we wanted to do is consistent with strategy. And this decision was rooted in strategy, absolutely rooted in strategy. We want to become an integrated energy company. We need to invest into the transition. To do that, we want to be able to do it at a range of prices. And what we set out yesterday is a framework, a financial framework that has a balance point of $40 oil. So we can do these things at $40 oil. And by the way, if oil is less than $40, we will take actions to preserve that. So what we've laid out is a very resilient distribution policy that enables us to invest into the transition while giving shareholders a fixed dividend and the potential for at least 60% of buybacks if there is excess cash flow.
Well, that was the BP Chief Executive, Bernard Looney, speaking with our Alex Steele. Now, Disney is leaning even harder on its streaming business. In its earnings call, the entertainment giant announced that Mulan will go straight to Disney Plus, and also announced that the launch of a new international TV service. Joining us to discuss all of this is Danny Berger. Hi, good morning, Danny. What is Disney's strategy with actually expanding its streaming offering?
Good morning, Francine. So this definitely does seem like a shift in strategy, and it's one that's really preparing Disney for a new world where people are traveling less to go to theme parks and likely not visiting cinemas as much either. Now, theme parks still the core of their business, but just anecdotally, what we've heard is that they have a lot of impressive safety measures. The Mulan move is certainly an interesting one because there had been hesitation from Disney to launch this on streaming services instead of straight to theaters. But again, this really shows they know that the world is changed. Perhaps that change will continue. Their CEO, Bob Chapek, did say, view this as a one-off, but at least for now. They're going to charge $30 to see Mulan along with the charge of having Disney Plus. And if it works well, don't be surprised if Disney continues to make moves like this, continues to release movies to their streaming services. They've also said that Star, it's a TV package that they acquired when they bought 21st Century Fox based in India. They're going to take that internationally as well. And it's clear investors like this move. Shares moved as high as 5.5% higher after the announcement that they would make this change, focusing on streaming, Francine.
Disney also posted a surprise profit in the quarter. What drove their earnings down?
Well, we definitely saw that the coronavirus drove their earnings down. They had a big hit from the closure of theme parks, but what really helped them post that profit was lower sports fees for their services like ESPN and ABC. They got to defer some of those payments in order to show the sports games. So they didn't have that this quarter, and that helped them post the profit, Francine.
Thank you so much, our Danny Berger there with the very latest on some of the Disney figures and challenges ahead. Now, Bloomberg surveillance continues. Tom King joins me out of New York. We'll have a lot to talk about. We'll be talking with, well, later today, actually, we get the latest on the pandemic with Dr. Anthony Fauci. And ahead of that, we look at the economy. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Beirut is rocked by a massive explosion at its main port, killing at least 100 and injuring thousands. Authorities are yet to confirm what caused the blast. Commerzbank cut its outlook. The German lender abandons its goal for a full-year profit as the Wirecard scandal adds to the pandemic pain. And Disney leans into streaming. As the pandemic threatens the entertainment giant's traditional businesses, it plans to release Mulan on Disney+. Well, good morning, everyone. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we'll spend quite a lot of time looking at the Disney business model to try and understand exactly what that means going forward. As less people go to theme parks and stay in more, I guess the only thing they can do is to try and bet more on their streaming service.
No, it's a pandemic model. It was a really interesting call yesterday. And, of course, there's the splash over Mulan and technology and all that. One of our producers, she's going to buy it 7 times. $29 a hit, and Tania's going to see it. It's going to be like $180 the first day when she gets Mulan. But to me, it was a real pandemic overlay, Francine. This is serious stuff, and you can bring it right over to the urgency in Washington on the stimulus, where yesterday, just as everyone predicted, there was a panic, and maybe they've jump-started those talks.
Yeah, so we look at stimulus. Just so you know, Tom, a subscription model is that you actually buy for Disney Plus and you don't have to buy the movie each time. I think that's how it works. But
okay.
We'll have, the experts on that. The other thing that's going on is not only stimulus, but it's, of course, what's going on with Lebanon with that horrific explosion. And economically, Lebanon was already on its knees, and this will just push it further into difficult territory. So I know we'll have a full roundup of some of the emerging markets. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, as you were discussing, the pictures are incredibly intense. That explosion at a warehouse in Beirut was felt miles away, and it filled the city's hospitals with casualties. Reports are at least 100 people were killed and some 4,000 injured. Lebanon's government says that almost 3,000 tons of flammable ammonium nitrate had been stored in the building since 2014, but they're not saying whether the blast was caused by an accident or an attack. The White House and Democrats are trying to strike a deal on virus relief legislation by the end of the week. That's according to Treasury Secretary Steven Mnuchin. Mnuchin says the two sides aren't close to a deal yet, but they did agree to set a timeline. One of the main sticking points is still the extension of supplemental unemployment benefits. It will be the highest level visit to Taiwan by a U.S. cabinet official since 1979. And it's seen as a challenge to China. Health and Human Services Secretary Alex Azar will arrive in Taipei in the coming days to discuss the global response to the coronavirus. Taiwan's response to the outbreak has been widely recognized as amongst the most effective in the world. In the UK, a panel of lawmakers has issued a report that is scathing about the way Prime Minister Boris Johnson's government handled the coronavirus. It urged Johnson to be more open with the British people on travel risks. And it said the March 13 lifting of all restrictions on the movements of people arriving in the UK was inexplicable. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. On equities, bonds, currencies, commodities, it's a really, really interesting day to check on a Wednesday, into claims tomorrow and the jobs day on Friday. Yeah, futures are up. We've seen this lift. NASDAQ leading the way, etc. The VIX comes in with a vengeance. This is a big deal, 23.13 on the VIX. We'll see how that settles out in the next hours. Yields plunging yesterday and coming back today, but still setting here with much lower yields from where we were a few weeks ago. That 10-year tips we talk a lot about comes in ever more. In gold, Francine, I can't afford it.
Yeah, no one can afford gold. European stocks are climbing to a one-week high. If you look at gold, staying above $2,000 an ounce after touching a record high. I'm also looking at investors and what they're focused on with U.S.-China trade discussions. And, of course, this fact that American lawmakers are making a bit of progress on this economic aid package. That's giving...
I'm placing stop on profit for Japanese yen at 105.692. 105.692. Okay, stop on profit placed.
To reach an overall agreement if we can get one by the end of this week. Well, joining us now is Paul Donovan. He's UBS Wealth Management Global Chief Economist. Paul, great to speak to you as always. Are we going to get a deal? Are we going to get a meaningful deal?
Well, I think a deal is quite likely. I mean, after all, it's in both sides' political interests. You don't want to be the political party being blamed for weakening the economic bounce back, because that's what's going to happen. If we don't get some kind of deal which offers some additional support to the millions of Americans who are currently unemployed, then the economic bounce back is going to be severely compromised. So I think that it is in the interest of both parties. They're taking it right to the last minute, but that's politics for you. So I do think that some kind of deal is likely.
I mean, a deal that would include what, Paul? What does it actually mean for the U.S. economy? Are there going to be blind spots?
So, I mean, one of the problems we've had right from the start with the pandemic is there's a trade-off between efficient policy and quick policy. So you could have a perfectly crafted, really efficient, really targeted piece of policy, but if it's not there quickly enough, if you're not getting the assistance through to the economy in a speedy fashion, then it's going to be useless because the economy will have collapsed while you're dithering around. So what I think we really need to focus on here is something to deal with the unemployment benefit, because this drop in unemployment benefit that we've had since last week, from $1,000 a week to $400 a week in round numbers, that is cataclysmic. It's really, really damaging, obviously, if you're unemployed. But from a macroeconomic sense, if you are in work, but you're afraid you're going to lose your job, and you see the consequences of losing your job being $400 a week, not $1,000 a week, that's going to change the behavior of millions more who are in work, but who are afraid. And that's the real thing we've got to address as quickly as possible.
Paul, where are we within the continuum of austerity? I mean, you've done such a good job over the years of gauging austerity across Europe and such. I mean, basically, there's a thrust of American politics that wants some austerity, hugely concerned about deficits. Where are we on the austerity meter?
So we're not, I think, going to be contemplating austerity for a while. What we would have recognized is this is an extraordinarily severe crisis, but it is also hopefully a relatively short-lived crisis, because fear, which is what's driving the economic damage, does fade over time. People do adapt. I've always said this, we always underestimate how good people are at adapting in the face of adversity. And that's what people are doing. They're adapting. So even though US caseloads are going up, the economic reaction, the fear, is less than it was, say, 2 or 3 months ago. And that's the benefit. So it's a short-lived problem. So I think what we have to regard this as is a sort of a step change increase in government debt levels, a one-off increase. That doesn't require austerity. It requires long-term planning, but it doesn't require sort of a shock of austerity to deal with it.
Really, really important insight. Paul Donovan, does that bring over to a step decrease in yield? I mean, can you take the steppiness, the discontinuous sense of it, right over to the market into yields?
So the problem we've got here, of course, is that alongside the increase in debt, you're also seeing an increase in financial repression. So I'm often asked, what's giving the right signal?
We closed another position on Japanese yen at 105,692. We have 200 pounds in profit on this one.
Central bank manipulation, it's reflecting interest rate expectations, and that's a whole different set of policies. Effectively, financial repression is acting as a new form of taxation, fairly discrete form of taxation, but it's there. The equity market, of course, represents a tiny subsection of the economy, and it's the part of the economy that's least affected by the COVID-19 crisis. It's your local mom and pop store. It's the beauty salon or the hairdressers. Not that I know much about hairdressers. It's the local bar. Those are the companies or the businesses that are most negatively affected. They're not represented in the equity market.
So, Paul, what's your biggest concern about scarring of the U.S. economy? Is it companies going bust? And does that lead to, to employment? How do you measure it? What's the one metric that will give us a shock to the downside in 3 months?
So I think the issue here is that we've got obviously a large number of people who are temporarily unemployed. We need to make sure that that temporary does mean temporary. So we want to stop good businesses failing unnecessarily. That's always been one of the #1 objectives. But at the end of this process, we are going to have some good businesses that have failed unnecessarily. And we are also accelerating structural change. The fourth industrial revolution's been accelerated. Issues around environmental sustainability, the environmental credit crunch, have been accelerated. And by accelerating that, what you're doing is essentially closing businesses in a 12-month period that would normally have been spread out over a longer time period. And that combination means that we are going to be tackling spare capacity, higher unemployment throughout 2021, 2022. That doesn't give us a downside shock, but what it means is we're still in a disinflation environment, and policy is going to have to be directed at trying to reduce that spare capacity that is going to be hanging around the US economy, the global economy, at least for the next 18 months.
Paul, thanks so much. Paul Donovan there of UBS Wealth Management stays with us. Now, coming up on Balance of Power, Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases. That interview, you don't want to miss it. It's at 12 p.m. New York, that's 5 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. An extraordinary week, back-to-back weeks of just terrific news flow. We're still today for the first of the labor reports. The ADP report claims tomorrow. Some saying, Francis Donald at Manulife saying that's a key statistic for the week. And then that jobs report, without question, the greatest mystery of my years here at Bloomberg. Right now, futures up 17, Dow futures up 174. Sometimes the stars align. It's always good to have Paul Donovan with us with UBS Wealth Management, wonderfully globally, strategically holistic, but with a real focus on China and the dynamics of the political economy or the economic politics of said China. And Paul, today, a really historic moment as a cabinet officer of the United States of America is scheduled to visit Taiwan. This is a reach back 40 years as well. How much of an affront will this visit be to Beijing?
Well, I think Beijing is unlikely to take it terribly well because, of course, the language around this, which is related, obviously, to the COVID-19 pandemic, has also been quite pointed about transparency and so on and so forth. And this is coming as we're also hearing that that the end of next week or the start of the week after, the US and China are going to be reviewing the phase 1 trade deal. So I think we probably have to see it in this context, that this is sort of a saber rattling, and we've had it on both sides, ahead of these review meetings with Lighthizer and Vice Premier Li on the China trade deal in a couple of weeks' time. So that, I think, is the context in which we've got to put this.
Paul Donovan, brief us on the domestic politics of Taiwan. I know it's very nuanced, it's very original. Give us a quick brief on the state of the political majority in Taiwan.
So Taiwan obviously has a very complicated relationship with the mainland, and the two sides have shaped the domestic debate within Taiwan. And this has been an ongoing problem or an ongoing issue for some time about how exactly the relationship between these parts of China are to come together. And I think that is going to continue to be a source of tension. The issue that we have had more recently is around U.S. military presence in the region, the fleets in the area, the South China Seas, where we've always had fleets in the South China Seas, but this has been somewhat compounded in recent months by the tensions between the U.S. and China, and that does bring Taiwan into the mix.
Paul, when you look at economic growth of China, where do you have the biggest concerns?
So the issue, I don't think, is necessarily so much around where is China's growth going to be this year, because what we're seeing is China is providing a reasonable amount of stimulus, and of course we all know the first quarter for China was devastating. Global trade has been very badly hit, and that's been disruptive for China, so they've lost 6 months in terms of global trade, 3 months in terms of domestic demand, but the domestic economy is coming back, and global trade is slowly recovering. So that's working to China's advantage. I think the challenge, though, is the structural changes that are being accelerated by the current situation, and what that means with regards to China's longer-term economic direction, because China's economic model does need to evolve from where it's been over the last decade or so, and that's going to be more complicated with more tensions with the United States, with other disruptions to the global trading model, and with just a general re-examination. The way the world has grown over the last 20 years, the structure of the global economy of the last 20 years is something that China has benefited from enormously. But the one thing we know is that structure is not going to work in the future, and that's going to be China's challenge, I think.
Paul, what's the biggest challenge for the world in general? Will it be, the job growth going forward, or is it going to keep the economies not at different speeds, given that some economies will benefit given our trends to more technology, and others will, necessarily lose out by quite a fair bit?
So I think that the big challenge now, it's not necessarily job growth, but it's making sure that your population has the flexibility to be able to adapt to a radically changing environment, and that government policy has the flexibility to recognize that it's a changing environment and to work with that. Trying to cling on to the old ways of doing things, that's just not going to work in this environment. And if you do that, I mean, we saw this in the UK in the 1970s, where the government was trying to cling on to an industrial policy that was 20, 30 years out of date. And it's disastrous when that happens. What you need is the flexibility to be able to help people to adapt to the changing circumstances. Jobs will be created. We will get jobs growth. But if your population is not able to take advantage of that, then you're going to have serious structural unemployment, structural problems, social unrest, and so on and so forth. So that's what we need to adapt.
Paul Donovan, thank you so much. Greatly, greatly appreciated, particularly those careful comments on China and Taiwan. Mr. Donovan, of course, with UBS. Coming up, this is an interesting conversation. How about the first Republican from Louisiana since Reconstruction? That would be William Cassidy of Louisiana. We'll speak to the senator here in the 8 o'clock hour. Really looking forward to speaking to Dr. Cassidy. Please stay with us worldwide. This is Bloomberg Futures up 16.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The volatility in the first two quarters were quite exceptional this year.
Part of it is participating in the better market opportunities that have existed in the second quarter, and we do expect a normalization of that.
The situation out there is still very challenging and very difficult to predict, so we should never be complacent.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ruchika Gupta. Let's get the Bloomberg Business Flash. Disney posted a surprise profit in its fiscal third quarter. The gain was driven by $1 billion in higher income at the company's TV networks. Disney was able to defer payments to sports leagues for games delayed by the coronavirus. Meanwhile, the Disney Plus streaming service will market the new live-action movie Mulan as a pay-per-view. It will be priced at about $30. Mulan will also go to theaters once they start reopening. In Germany, Commerzbank has abandoned its goal for a full-year profit. Losses tied to the failure of payments provider Wirecard added to rising costs to cover bad loans. Commerzbank is trying to emerge from a leadership crisis. Both its CEO and chairman announced their resignations last month. And another European car maker is reporting a big hit from the coronavirus. BMW's automotive division posted a $1.8 billion loss in the second quarter. The pandemic forced dealerships and factories around the world to close for several months. One bright spot, BMW says sales volumes have started to grow in China. And that's your Bloomberg Business Flash. Tom, Francine?
Yeah, Ritika, thanks so much. Let me do a data check right now. I could go for an hour here. There's really nuance on this Wednesday. Futures up 15, fine. I want to go to EM because we're going to talk about that in a bit. Turkey continues to unravel this morning. Dollar lira to a 703, and I'm really watching euro lira, which is almost a jump condition and has some real convexity, some real acceleration to weaker lira. Francine, that's really something to watch, tangential to the horrific blast in Beirut.
Yeah, we'll have plenty more, of course, on that horrific blast and what it means for the Lebanese economy. I'm looking at European stocks. They're actually climbing today. They're actually climbing on the week. Investors are focusing on these U.S.-China trade discussions. They're also focusing on the fact that we seem to be a step closer, Tom, to U.S. lawmakers making progress on an economic aid package. Gold, I know you mentioned it, but let me mention it again because it's a big deal. Continuing its ascent above the record $2,000 an ounce as investors considering the effect of more government stimulus. I'm also looking at the 10-year Treasury yield edging up. Coming up next, we have plenty more on emerging markets. We'll also have plenty more on Lebanon with Yakov Arnopolin. He is PIMCO Emerging Markets Portfolio Manager. We heard about the blasts in Beirut. We looked at the videos. We still don't know exactly why this depot exploded. So we'll try to get to the bottom of it as well. This is Bloomberg.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Bloomberg surveillance from London and New York, and these are images live from Beirut right now. For anyone within the investment business of a certain age, the agony of the collapse of Lebanon is tangible. Years ago, folks, when I first studied foreign exchange, the Lebanese pound was one of the 4 great currencies of the world, alongside the Deutsche Mark and a few other select currencies. Those days are gone, and certainly with what we've seen here in the last 24 hours has been just extraordinary. Another part of the collapse of Lebanon, the tragedy of Beirut. There is no one at Bloomberg with more experience on this than Riyad Ahmadi. He has been on the watch in the Middle East for decades for Bloomberg, and we welcome him today. Riyad, you've mentioned that all of our staff in Beirut is fine. That is wonderful news. But this is a city damaged. Do you gauge the damage as temporary or separate, or is this a city devastated? Which is it?
The city is devastated, Tom. There's hardly anyone who hasn't been affected, whether directly through family being injured or people looking for loved ones. There's still 100 people missing, or at the very least, their apartments damaged. I think Beirut, through all the years, hasn't seen anything like this, a single explosion doing this kind of damage.
There was 25 years ago, Riyad, an explosion in Oklahoma City which changed how we look at security in America. I know it is complete speculation of accident or attack, but a common theme here is the chemistry of ammonium nitrate. Were you surprised at the tons of ammonium nitrate in one location?
I would say so, and I think if you listen to the Lebanese government, the prime minister, the president, they're all surprised at having this kind of, this quantity of ammonium nitrate in one place. They're insinuating, they're suggesting that also the ammonium nitrate shouldn't really have been stored in that warehouse, that that warehouse was not equipped to handle neither the amount or indeed just handling ammonium nitrate. So as you mentioned, there are ammonium nitrate. There have been accidents before, one of them in Texas as well. So, there are a lot of questions. You listen to Lebanese, there's a lot of questions about what triggered this, but also why ammonium nitrate in that quantity was still being stored there. Apparently for at least 6 years it was stored in that warehouse.
Riyad, already Lebanon was really struggling under the weight of the economic meltdown that we saw in recent years. How will the explosion to the port actually affect the economy? How will it impact, the need for food, medical supplies, and other goods?
That's exactly the question a lot of Lebanese are asking themselves now. I have relatives myself who are wondering whether there will be enough wheat, whether there will be a wheat shortage. The granary was right next to the explosion. It's unclear how full the granary was, and yet the question is, does Lebanon have the foodstuffs, the wheat that it needs? Officials are coming out and saying there is some wheat around, but there are question marks now over the port. Most of Lebanon's import, Lebanon is a very import-reliant economy. Most of those imports were being brought in via the port of Beirut, which is pretty much destroyed at the moment. Lebanon government has already said they're going to use the port in the north, in the city of Tripoli. However, it's unclear whether that will be able to fully compensate for the loss of such a major artery for the Lebanese economy.
Thank you so much. Our Bloomberg Middle East Executive Editor, Riyad Ahmadi. Now joining us is Yakov Arnopolan. He's PIMCO Emerging Markets Portfolio Manager. Yakov, we have a number of stories, of course, to talk to you about, and thank you so much for joining us. But let's start with Lebanon. Can Lebanon, and should Lebanon at this point rely on foreign aid? How does the economy look, given what we had known about Lebanon and the explosions yesterday?
Sure. Good morning, Francine. Good morning, Tom. Thanks for having me on. I think to start off, I would just say this is, first of all, a tragedy. our thoughts and our prayers go out to the people of Beirut and the people of Lebanon. And look, this is probably the biggest blast in the country, in the city, since civil war that ended well over 25 years ago. Having said that, I think everyone's still puzzling over exactly what happened, what caused this, whether this was an accident or whether this was a terrorist attack. If it's the latter, if it's a terrorist attack, obviously very negative, because this could stoke sectarian sessions among the various religious groups in Lebanon. If it's the former, they're both negative scenarios, unfortunately. If it's the former, if it's an accident, that may prompt the downfall of the government, which is already not a particularly strong government. And as we've seen in the past, it takes a long time to form a government in Lebanon. So what does that mean for the economy? Well, this was already, as you mentioned, it was already an economy on its knees. The country defaulted in March of this year, actually before the virus, after years and years of financial engineering unraveled. And, of course, now there are negotiations with IMF. The negotiations are very slow because there are questions about the true finances of the central bank. How big is the hole? How negative are their net reserves? So negotiations are slow, if not stalled. If the government falls, well, then you have nobody to negotiate with, right? So that would just push things out even further in terms of a large potential package from the IMF. I'm sure the international community will step up and give short-term economic aid, humanitarian aid to Lebanon. But for the economy, this is an even more significant hit. Just anecdotally, when I was in Beirut in February, March, there were a lot of discussions about how there are still gems in the Lebanese economy. Privatization will take off. And one of the things mentioned was that, well, there are foreign buyers for the port. Obviously now with the explosion again, it just makes you wonder whether there'll be a lot of foreign interest in investment in the country.
Yaakov, I'm looking at a lira chart. So we saw rapid devaluation. We saw a soaring exchange rate on the black market, which fueled inflation. I mean, economically, what kind of figures are in your forecasts?
This is a country where we've been reluctant to get involved. We remain a void. We don't have any exposure to Lebanon, and continue to stay that way. I think that the hurdle to invest is very high, because we would need to see the country get past the default, get an IMF program, figure out what will be the damage to its banking system. And they've had almost you can say triple whammy: the default, the virus, and now the explosion and its consequences. So I think all the economic forecasts will have to be redone, but unfortunately it's quite dire. So we're kind of going from bad to worse.
Yaakov, I want to look at the Levant as a whole. And Mr. Erdogan, has spanned across 20, even 30 years, has made very clear he wants to have an overt presence on a political basis across the Eastern Mediterranean and, frankly, down to Egypt and Libya as well. It seems in total chaos. What is your interpretation of the economics of Turkey and the rest of the Levant, given what we see in lira, given what we see in flows and desperation within financial Turkey?
Yeah, of course. I think, as you pointed out, there's a lot of military adventurism, if you want, coming out of Turkey. We're seeing it in Greece, with the islands next to Turkey. We're seeing it in Libya, where it seems Turkey wants to take on the forces of General Haftar, which are backed by UAE, backed by Egypt, backed by Russia. Significant military support behind forces that opposing Turkey's position. So it does make you wonder, what is the strategy? It certainly seems to be a lot of saber rattling and kind of reluctance to really engage, reluctance to incur losses or get involved in anything that goes beyond a short-term kind of minor skirmish, because the reality is the Turkish economy cannot afford that. And it does make you wonder how much of this is kind of a distraction for some of the stresses that the economy is going through. And we see that the lira is an interesting example. Realistically, lira weakness in and of itself isn't actually bad. In fact, I think we'd much rather see lira depreciation than the sort of massive intervention we've been seeing. of late.
Well said. The adjustment will be either abrupt or not, but there it is, a depreciation of lira. Particularly, I'm looking at euro-lira after record weakness today. We're going to continue with Yakov Arnopoulin of PIMCO on emerging markets, probably look at the Pacific Rim here. Coming up, without question, our interview of the day on stimulus and on Washington, the politics wrapped around our finance. The former Treasury Secretary of the United States, Jacob Lew, will be joining us. Jack Lew in the 6 o'clock hour. This is Bloomberg. Good morning.
Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg First Word News. The pictures are shocking, and so is the aftermath. In Beirut, that explosion in a warehouse is blamed for at least 100 deaths and some 4,000 injuries. Rescue workers are looking for survivors today. Lebanon's government says more than 2,700 tons of flammable ammonium nitrate has been stored in the warehouse for 6 years without safety measures. White House and Democratic negotiators are trying to reach a deal on a stimulus relief package by the end of the week. They're under pressure to act. Millions of unemployed Americans just lost supplemental jobless benefits. House Speaker Nancy Pelosi and the Senate's top Democrat, Chuck Schumer, are playing hardball. They've dismissed smaller-scale proposals offered by the White House. There was promising news for some of the states hardest hit by the coronavirus in recent weeks. California reported its fewest new cases since June. Florida and Arizona also saw their infections slow. Meanwhile, a bipartisan group of governors have joined together to buy millions of antigen tests. Bloomberg's learned the U.S. and China plan to review the Phase 1 trade deal later this month. That comes in the midst of rising tensions between the two countries. China has fallen behind on its commitments to buy more American farm and energy products. Still, U.S. Trade Representative Robert Lighthizer says there have been significant purchases in recent weeks. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg. Francine, Tom.
Thank you so much, Ritika. Now let's go back to our focus on emerging markets, and let's go back to Yakov Arnopoulin of PIMCO. Yakov, we were talking a little bit before, of course, about Lebanon. We mentioned Turkey. If you look at the way that COVID-19 is ravaging a lot of South America, and I'm thinking of Brazil, particularly, what does it mean for an investor?
Yeah, of course. Well, A lot of eyes today in Brazil because of the BCB, the meeting of the central bank, the Monetary Policy Committee. We may see another cut from 2.25% to 2%, probably the last or potentially the last in the cycle. But it's actually quite remarkable to see rates in Brazil at 2%. I think those of us have been in emerging markets for a while are more used to seeing double digits in Brazil in terms of rates, not pure 2%. And I think this is a great example, kind of reminds one of the disinflationary trends in the world economy, in emerging markets, and those have only been exacerbated by COVID-19. And I think that's what we're seeing right now in Brazil. We're probably going to see something very similar in the likes of Mexico, where also we'll probably see an ongoing rate cutting cycle.
Jacob, does that, I mean, what do you do with the rest of South America?
Well, look, it's we're very country specific, let's put it this way, difficult to generalize, but, I'd say Brazil probably still takes a spot as being the most interesting story, because although today markets are focused on rates and BCB, the central bank, I think the more interesting story that will affect Brazil on a 3-6 month horizon, 1 year, 2 year horizon, even longer, is fiscal. And there we're seeing this tug of war between Minister of Finance Guedes, who is very much supported by markets, trusted by markets, who's pushing for a spending cap. He's pushing for tax reform. And on the other side, we're seeing Congress that's pushing for a payroll tax, that's pushing for more spending via extending the state of emergency. So I would say all eyes are still on fiscal in Brazil, because that's going to impact the path of asset prices on a much longer horizon.
Jacob, I got time for one last question. I'm going to rip up the script here and go back to your Carnegie Mellon economics of a few years ago and a guy named Alan Meltzer. Alan Meltzer, more than anyone in the modern age, knew that the central bank was a lender of the last resort. Is Jerome Powell going to get this done? Do you have an optimism that we can have Meltzer economics and have a central bank solve our problems?
Look, I think for now, the acronym that's been kind of the acronym thrown around that's been trendy is TINA, TINA. There is no alternative, and I think it's fair to say for now there is no alternative to the Fed and the ECB. So I think that's certainly very supportive for asset prices. Probably will continue to be so for the near future. And I think as a result, the sort of melt up we've seen from the March lows to where we are today is very much due to the Fed support, the ECB support. And again, I think there's more firepower they could apply to support asset prices for now.
The optimism there. Jacob, thank you so much. Jacob Arnapolin of PIMCO, their emerging markets portfolio manager. Really, really informative there, particularly on a Levant that is just in massive disarray. Looking at Lira, 7.02, another bout of dollar Lira's Turkish weakness. And I'm really looking at Euro Turkey, which goes out to new record weakness as well off of the strong Euro. DXY under 93, that's that blended major country index showing renewed weakness like we showed yesterday. It'll be interesting to see what U.S. paper does we've got much more coming up. Futures up 19, Dow Futures 191. Michael Kushmo will join us with Morgan Stanley. Looking for that with Lisa Bramowitz and John Farrow is with John Farrow as well. Kushmo in the 7 o'clock hour. This is Bloomberg. Good morning.
It's humbling, and it's incredibly exciting in terms of anything that we've done, so far as a company. Florence isn't trying to trick you that she's a real person. Florence is saying, I'm a digital person, I'm here to help. Florence is digital, there is no judgment involved. So the lack of human judgment actually makes our digital people more approachable and potentially more helpful.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg Business Flash. The Trump administration is demanding that Purdue Pharma pay more than $11 billion in criminal and civil penalties relating to the opioid epidemic. That would be part of its bankruptcy reorganization plan. Purdue is the maker of the infamous OxyContin opioid painkiller. The company has been accused of illegally marketing the drug. Richard Branson's Virgin Atlantic Airways is seeking bankruptcy protection in the U.S. The airline filed under Chapter 15, which allows foreign companies with U.S. assets to protect themselves against claims while they're restructuring. Virgin Atlantic says it is finalizing a rescue plan that's already supported by a majority of stakeholders. And the SEC reportedly is investigating Kodak's announcement of a $765 million government loan and a stock surge, according to Dow Jones. The investigation is at an early stage and may not produce allegations of wrongdoing. Shares of Kodak soared after the announcement, and that briefly led to a windfall for some company executives who had just received stock option grants. And that's your Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, Commerzbank has cut its goal for a full-year profit after losses tied to Wirecard, added to surging costs to cover bad loans. The chief financial officer, Bettina Orlopp, spoke with Bloomberg as the German bank posted its second quarter earnings while appointing a new chair and searching for a replacement for the current chief executive. Here she is.
Well, first of all, Q2, we have shown a profit. So that's already important. And I mean, for the full year, we said already in the Q1 announcement that it would become much more aspirational to reach a positive net income, given the corona impact on revenues, but also clearly on the loan loss provisions. Now we have a single case, which was unexpected, I have to say. And that is even more important. We want to book in Q3 or Q4 further restructuring charges to really make progress on our cost reduction program. And that all in all brings us to a negative net income for this year.
In terms of, Bettina, the Wirecard story, before you were CEO at Commerzbank, long before, journalists were writing stories about the problems at this bank, and the amount of smoke coming from the company meant pretty much everybody should have known there was fire. The regulators certainly didn't seem to wise up to that until far too late. Neither did the government. What do you think needs to change so that we don't have another case where a German DAX company, misplaces more than 2 billion euros?
I mean, the discussion is ongoing, and I will clearly not comment on single cases from our side. But what I can say as a general thing is that clearly, I mean, one is a question on how do you regulate, for example, payments providers, and that is something which needs to be discussed by regulator and politicians. And on the other side, I think everybody has to ask who is involved in cases like that. What have been the red flags, and have we dealt correctly with the red flags which were out there? And that is something which will happen over the next weeks and months, I'm pretty sure.
Bettina Orlop of Commerce Bank, they're a deeply troubled bank, and of course, there are great challenges with their second largest shareholder, Cerberus, I should say, as well. Let me do a data check right now. Really extraordinary Wednesday data check into the jobs reports of Thursday and Friday. A continued lift to the market, NASDAQ 100, and the tech lift as well. What I'm watching more than anything is the fixed income space. Right now, I would suggest that's a litmus paper of the system. We saw really low yields yesterday. A bounce back here, I'm going to call it almost knee-jerk at the 10 and 30-year space, and we'll have to see what happens there. I'm watching Swiss 20-year as well, still negative, and again, that's come back a little bit. We see some unraveling in the dollar with continued dollar weakness really out to a new level, and I noticed, Francine, a VIX of 23.17 is remarkable. Francine?
Yeah, Tom, I'm also looking at a couple of other currencies that we should be watching out for, kind of on the periphery. I did also look at pound, just because we're expecting the Bank of England to come up with something that could be unusual tomorrow. In general, European stocks and U.S. futures are actually gaining. Investors are focused on the fact that lawmakers in the U.S. are making progress on a possible aid package, and investors also focusing on the U.S.-China trade discussions, Tom.
Lots to come here. Jacob Lew to join us in the next hour, the Treasury Secretary, former Treasury Secretary, Dr. Fauci, later today on Bloomberg. Coming up next, the chief economist for J.P. Morgan, Bruce Kasman, will join us. This will be most timely. Stay with us with Futures Up 18. This is Bloomberg.
Fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. And it will take continued support from both monetary and fiscal policy to achieve that.
The Fed really can't stimulate the economy very much when people don't want to borrow and business is depressed and so on. What they can do is make sure we don't have a financial calamity on top of the real calamity, which they've been doing very well and will continue to do. We need fiscal support.
It also is a very important step in dealing with inequality. Ultimately, inequality and the institutional biases that are baked into the cake of our economy.
I wouldn't be surprised if we did get the scenario Tom and I were talking about, that the market would just take over and drive interest rates into negative territory, even without the support of the Fed.
You see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This morning, be careful what you do not know. It is early afternoon in Beirut, the day after one and then two horrific explosions, accident or attack, the risks of the chemistry of ammonium nitrate or further risks of civil war and terror. It is too soon to tell. It is not too soon to say gold ascendant surging as yields test new lows, Turkish lira weaker, and it is not too soon for panic in Washington. Suddenly, stall talks unstall as there is an explosion of public unrest. In this hour, Jacob Lew. Good morning, everyone. This is Bloomberg Surveillance from our world headquarters in New York, from our world headquarters in London, Francine Lacroix. Francine, just extraordinary news flow as well. There's no way we're in the summer doldrums.
No, and actually, if you look at August and what we've seen in August in the past, we've saw quite a lot of volatility because traders are still away. And I have to say, Europe is very quiet. So, the impact on the markets of a lot of news flow whilst traders away